Good afternoon, everybody. Good afternoon. I hope that you can hear my voice. Hope that you can see the slides. Welcome to Paul's Monday Market Update, 169 for Monday, 13th of January, 2025. Hope you're all well. Hope you've had a good weekend. Hope you're enjoying this rather eventful start to 2025. Great to have you all here. Great to see you there, Jason. Thanks for all of you joining in. As I said, if you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can fit in over the next 25 to 30 minutes. We will look at strength and weakness within the FX markets and indices and commodities markets. Then we will have a look at some charts of interest. There is a lot of them today. Charts that you might just want to add to your watch list to see how they play out this week, or you might just be a little bit of an educational element to see how these play out. And then we'll have a look at the live market. It is not a signal service. It is not trade recommendations. It is purely my view of what's going on in the markets, which may be of help or consideration for yourself. As always, you're always very welcome here, but just remember that you're always responsible for your own trading decisions. Okay, we're going to cut straight into it because I've got lots of charts to get through today. If you're new to trading or new to joining us, you might sort of look at this a little maybe intimidating or overwhelming. But all it is it's just some snapshots from my own model, from the work I do at the weekend. I have a model called the STAM, where I'm looking for strength, trend, and momentum, primarily within the FX markets, but also indices and commodities. By doing so, I find that I can sort of allocate my time, energy, and resources more effectively during the week. So, what is this telling us? How can we actually use it for ourselves with our trading decisions? So here we are. We are into trading week number 3 of the year. Okay, for 13th of January, and looking at where's the strength, where's the weakness. Not a massive shock to find that US dollar is still top of the pile there. Okay, I think this morning even we sort of tickle the soft underbelly of 110 on the dollar index, which we'll look at in a moment. So we're still seeing dollar strength, and we're also seeing weakness still in the Aussie dollar and the Kiwi dollar. Where we have seen change is the Japanese yen. Okay, has edged its way up there, okay, from up to second place along with the US dollar. Probably lots of different reasons for that, all right. Opportunities for rate hikes, whether they actually come. Also a case of the Japanese having to start to sort of get back to perhaps intervening in the Japanese yen, as the certainly against the dollar. It's seen such a dollar strength and yen weakness there, okay, that it's become a little bit perplexing, should we say, to the Bank of Japan. Close to home, though, what we have seen, okay, is sterling dropping out of the top 2, and actually, falling down pretty strongly there against its major competitors. That shouldn't really be a shock, should it? Those of you who've been joining me for the last few months or even the last few years said that sterling strength that we saw last year was more a case of weakness in others than in particular strength in sterling, and of course that sterling strength has just basically evaporated in the what are we 13 days of 2025, which we'll look at a moment. Those of you who joined me last week, we talked about how there'd been strong selling, and then of course that has increased, and a lot of that has increased with invariably politically some of the commentary Mr. Musk has been making about Starmer and his chums, but also economically, just looking at the kind of yields on 10-year and 30-year gilts, looking at that, which we will take a quick look at, and how that has impacted confidence, or rather the lack of it, in the UK. And so that has been associated with some heavy selling of sterling, some great opportunities being short sterling in 2025. Europe is not exactly filling anybody with any confidence either at the moment, and Swiss franc is holding on there. And you might sort of say, if you've got dollar top, yen second, Swiss franc third, you might actually say, are we in a bit of a risk off environment there? Okay, normally that's what we would associate with it. For those of you on VTP stage 1, that's what we're going to cover on tonight's call at 7:00, understanding risk on, risk off. When we look at the currencies themselves, well, certainly, okay, within the STAM, lots of from being strong buys in sterling sterling. Okay, that basically is evaporated there. Okay, in the sterling pairs, and not unsurprisingly, there has still been sort of lots of sells there in those Comdol currencies as well. Certainly today, since the markets opened last night, sterling has taken the brunt of the action. That shouldn't really be a shock there. Okay, shouldn't be really a shock. Rachel Reeves, the Chancellor of the Exchequer, should be doing something about that, but I suspect she's probably too busy filling in her P45 and is on the Indeed.com website looking for her next job. I might be being a bit harsh there. We'll see. We'll see if she survives the week, but we'll look about that in a moment. When I look at the indices and commodities and how they are on the STAM, well, what we can see is, we've all gone tactically bearish there. Okay, it's all tactical shorts on that side there. Okay, along with ASX, the Aussies. FTSE, it weirdly has not dropped as strongly as those American indexes. All right, but we shall look at that in a moment. Okay, a lot of that is to do with we had another bumper jobs number out of America on Friday, which basically has effectively pulled the rug on people's hopes for a 50 or 75% basis points cut in American rates. You're going to get maybe 0.25%, and that might not necessarily be for till the latter half of the year at the moment and stuff. So invariably, that's kind of taking the wind out of the wind out of the sails of American stocks, and we're going to look at quite a few of them at the moment. We've got quite a busy week ahead on that, but as you can see there, right. Interestingly, oil is STAM strategic buy. That's been quite some move there in oil over the last week or so, right? And gold has decided to sort of reappear as a kind of strong buy, strategic buy there. Okay, but once again, we will, as I said, we'll look at that in a particular moment. So. My overall view is the sands are shifting, and I said that at this last week. Okay, I've said that all last week. Is that we might take a couple of weeks for people to start to position themselves. Of course, then next week we've got the inauguration. All right, so it's going to be an eventful January. All right, it's going to be an eventful January, but as always, there is opportunity. It's just about making sure you do the right analysis and you position yourself accordingly and manage risk. Okay, so that's over. Let's have a look at some charts of interest. Okay, so I have lots of charts of interest because we have basically an awful lot of American banks have got their earnings calls later this week, a huge number of them. So we're going to look at a good few of them. But let's start closer to home. All right, this is UK government gilts 10-year yield. For those of you who have been watching the I would say for those of you who've been watching the news, you'd be seeing it plastered all over, but it has not been. It has not been. What we can see here is the kind of yields on 10-year government debt, is trading at the highest it has done for many years, and is as I say tickling the soft underbelly of 5%. The 30-year yields are already through that. Is in terms of some sort of perspective. This kind of period here back in 2022, this was the A, when all the central bankers told us that inflation was transitory, but anybody with even a GCSE in economics knew they were talking out of their backsides, all right? But then also you've had here sort of August, September time. This was let's call it, you can call it whatever you want here, the trust turmoil, the trust tumble, whatever, however you'd like to just call it and describe it. And that's where we saw that price pushed up above 4%, and of course the media were all over Truss and Kwasi, the Chancellor, and that invariably ended in their resignations. If we look a little bit closer here, in sort of July time when the new Labour government took over, we saw yields kind of drop beneath 4%, but then we kind of double bottomed there and worked our way back up. We had a little bit of a respite there. That was around the American elections, but you can see over the last 6 weeks, and effectively the impact of the Rachel Reeves budget at the end of October, that really has sort of kind of markets are just not convinced that it's actually going to work, and so of course that means that if they're going to lend money to the UK government, they want a higher risk premium for it. So no surprise to see 10-year 30 yields just basically marching higher, as we can see there. Is that going to cost her job? It should, but we shall wait and we shall wait and see. And I know some people sort of maybe defending us, saying that yields are higher in the US, yields equally marching higher in the US, and that's a very fair point. But I think they are in a they're in an envious position that they have the opportunity to basically Trump is gonna cut a lot of waste, and basically he's going to be very pro business and encourage them to basically to grow, whereas the Labour government here are doing the exact opposite. And then also America is it is energy independent. Okay, it's energy independent, all right. Whereas we are not. Okay, and we even over this weekend we had to buy in from France. Okay, because to cover our needs, because of course we have what's the right word? We have hooked ourselves up to the Ed Miliband net zero nonsense and stuff and what have you. And so not only are we not energy independent, but we're paying far too much for energy as well. All of these things are going to create a drag on the UK government. And I think, as I said last week, we'll be in recession, all right, within 6 months in this particular movement. So on that cheery news, all right, that has also had an implication on sterling, and we'll look at that in a moment. But that's what we can see. That's what's going on in the UK, and of course, that's going to be I think that a story that we're going to see develop throughout this week. Well, next, as I said, there are an awful lot of American banks have got their earnings calls this week, sort of Wednesday, Thursday time. What have you got? You've got JP Morgan, you've got Citi, you've got Wells Fargo, you've got BlackRock, you've got Bank of New York, you've got Goldman Sachs, Bank of America, Morgan Stanley, and probably a whole host of others. Right. So this is a week that people are going to be interested in financials and in the basically state of the banking sectors. This is the weekly chart at XLF. All right. This is the financial ETF. And you can see for yourself, weekly chart. We were literally just coiling up here for a good while. 200 period moving average acting as dynamic support along the way. And then once we broke, and really you can see that there has been quite some good trend, hasn't it? Quite some great weekly trend up there. But we kind of petered out, all right, running in towards the end of last year, and you can see we've kind of fallen away back beneath $50. And last week, I would look at this as it's a bearish engulfing candle. We've closed beneath the 20 period moving average, which we haven't done for what's that, a good 6-7 months, all right. And so I'm going to be interested to see how does this data this week, how do these earnings calls implicate this? Okay, what's the like? Is it a case of we get good news and we're back to 50, and then I would look at that as an inflection point, all right? Or is it a case of we're going to sort of droop a bit lower depending upon what the numbers we come out? I don't consider myself a banking specialist. We're traders here looking at a chart, seeing what we can learn and actually what we can use ourselves. But XLF, that has been quite some pullback there over the last 6 weeks. And the question, of course, will it continue? If we look at a couple of the other ETFs, so this is KBWB, which is the Invesco Bank ETF, not massively different, is it really, from XLF? Right, it's had a great run for a year or so, overextended up to $70, and we've reversed off that. And once again, last week we had pretty much bearish, a bearish engulfing candle there. Okay, after a couple of weeks over the Christmas period, festive period, we've basically just come back bearish. All right, so the signs are that the market's all ready for another bearish move leg lower. That's what my view would be. And it's a case of seeing whether those earnings support that. KRE, okay, which is more about US regional banks, but I just put it up here just to give us a bit of perspective. Same as we saw in KBWB and XLF, we'd had a bit of a run up here to $70. We pinned it; it became an evening star, and we've kind of fallen back to the 200 period moving average. Okay, so as I said, are we going to see a continuation of this with some of the earnings data this week? It'd be interesting to have that just as we go into the inauguration of Trump next week. Let's have a little look at some of the charts there. Okay, so this is a BlackRock BLK. I was kind of curious about this because, once again, all right, if you look at that, $600 just over a year ago, 15 months ago, in a great uptrend. But you can see for yourself, we've got above 1,000, up to 1,080. But you can see for yourself, we're starting to basically there's starting some sell off there, isn't it? That was some sell off last week. Okay, back beneath the big round number of 1,000. Strong close beneath the 20, which we hadn't closed since about the summer of last year. As I said, I'm going to wait to see. Does the data give us a little bit of a sort of a bit of a bounce up to around the kind of the 1,000 area, and then what I'll be looking for is, well, does it then print a lower high? That's terrible graphics art from me, but I'm a better trader than I am an artist, ladies and gentlemen. Would we get a bounce up to there, and is that an inflection point that then would basically be a great place to shoot south from? So that's BlackRock. Goldman Sachs. Okay. Goldman Sachs weekly chart. You can see that there's a pretty much a similar trend across the ETFs, across most of the space. Pushed away up, and and if you look at that really from what's that about November 23, we basically where we were at $300. All right, Goldman Sachs, we've doubled that in that period. Had a real push, strong push away, but $600 would come off it, going sideways, and as I said, another bearish engulfing candle there. See how this is almost like a ski jump, all right, setup. Okay, that's what I'm sort of curious about at the moment. And so, as I said, later on this week, we'll get a bit more clarity when we get those earnings calls out there. But you can see that, as I said, it's a recurring pattern across pretty much all of those banking and finance ETFs at the moment. Yeah, CitiGroup as well. I tried to put these in a bit differently because yes, we have had the great trend, but actually, unlike some of the others we've just looked at, who've already started to fall off, CitiGroup has held up. Okay, yes, last week we had a nice bearish pin bar, a false breakout. Is that a case of that it's holding up better than the others, or is that a case that it's just lagging the others? If I'm honest, I don't know. If I'm honest, I don't know. I'm just looking at the price action as it plays out in front of me. Once again, I'll be looking at this swing point here. That is kind of the structure level, and I'll be saying, if we break that, we'll then back up to 70 and down. That is a reversal possibility. But as I said, a lot of it might happen. Not only the earnings calls, but actually also what Trump decides to do in his first couple of weeks in power. Okay, so it's going to be an interesting couple of weeks. That's why we're watching all of these areas as closely as possible. And just a couple of last, not to complete all banking. This is TSM, Taiwan Semiconductor Manufacturing Company. They themselves have got an earnings call later this week, and once again, it has been an uptrend, and it has been strong in parts, but there's also been some very deep pullbacks there. Okay, nice kind of a bull flag there. Okay, ending with a pinball, the way I like it. But what we can see is that we had run from $100, all right, up to 200. Okay, this is the US listing, okay, of TSM, and it's a case of interestingly last week, all right, we had a little bit of a pop and then a drop. I think part of that's probably to do with Nvidia and Mr. Hung and his comments, but equally, we're going to be interested to see how does that play out this week. Then the reality is AI is still of interest, all right. AI is still of interest to markets and stuff, and so that has been, well, you can see that's reflected in TSM's great trend over the last 18 months, 15 to 18 months, and also it's a case of what will they announce, okay, this week that might basically keep them pushing forth, or at least holding above $200. And then the last chart of interest before we switch to live markets, this is UnitedHealth Group, all right, who they are also reporting. I think it's Thursday this week. Interesting stock, all right, both in a technical term, but also in terms of the news. You might remember UnitedHealth, they were in the news quite a bit before in the run-up to Christmas, after one of their directors was assassinated in the street in New York, and there was lots of unsavory elements sort of just being associated with some of the, let's say, some of the practices of the company. Anyway, less about that. As traders, we're just going to look at the chart. So this is the weekly chart, and when I was looking at this, doing my analysis, for me, really, for the last couple of years, we had basically been in a range between $550 and $450, like $100 range. Okay, now I know some people love trading ranges, and fair play to you. That had been, just a fantastic chart to really to work that way. And then we had our breakout. Okay, we had a breakout last summer, and as you can see, it wasn't a pretty one. It ground its way, okay, from 550 to 600, but even then, it looked like it was double topping. Then invariably we got a bounce above, and then as you can see, after the assassination at the end of last year, you can see we dropped from like 610 back to sub 500. Okay, and so once again, these guys are releasing towards the end of this week, and I'll be curious and interested to see A, what the numbers are like, and B, more importantly, how does the market react to that? Okay, does 550, okay, which became resistance, then became support, does that basically hold up again? Or are we going back south to 450, a level which is, which you can see as a level over the last few years the market has kind of has taken on board. So this is going to be an interesting one to see how this plays out. All right. So as I said, it might be a chart of interest you might want to add to your watch list for later on this week. Okay, so I know there was lots of charts of interest there. Normally, I sort of only do like 3 or 4, but there's an awful lot going on this week. We're getting ready for, as I said, the shifting sands going on. But let us now switch across to the live markets and see what's going on there. So just bear with me a moment, and we'll bring up the charts and go for that. As I said, this is West Texas Oil weekly chart. We have broken through this resistance, broken through the 50. And as I said, some of that is to do with, kind of the new sanctions on Russian energy that's causing troubles for the Chinese and the Indians, a bit of a geopolitical play there, right? And that has been good for West Texas. Okay. And we can see that has really, out of that base around 68. Okay. We're $10 higher now. That's what we're looking at there, which, will add to some countries' woes, but that's a different story for a different day. As I said, sorry, before the move, here we go. That's Dow, NASDAQ, S&P 500, Russell. And as I said, the STAM shows them all as tactical shorts at the moment. And you can probably see that you can probably see that yourself. Okay. We've had basically bearish channels. Okay. Yeah, maybe that's SP 500 different, but Russell there, okay, bearish channels there, okay, that's where we're coming there. That's the the trajectory, all right, on let's say on a shorter term tactical basis. And as I said, we're going to get a lot of those kind of financial stocks this week, which are going to have an impact. Is that going to curtail these downtrends, or is that going to basically accelerate them? And then, of course, then we get into next week into inaugurations, etc., and see how that plays out. So it's going to be a rather eventful couple of weeks. And as always, as I say, when this happens, there, make sure that you're on top of your news flow, on top of understanding, okay, what's going on, and also you just manage risk, intensely, and then make sure that you are, you're keeping your powder dry for the best opportunities. So, all those American indexes, tactical short, okay, a little bit closer to home. All right, Nikkei is finally okay, starting to sort of trade beneath that weekly 50. But said, it's been holding up there for a good while, all right, but we're starting to trend there. And now, of course, this is only this week. We've got a long way to go. But as I said, it's we can wait to see is that 50 gonna crack and give us that head and shoulders pattern that we can see on the weekly chart. If I go to DAX, listen, regardless of the economic news you see coming out of Germany and the political news, all right, the DAX has just ploughed its way higher. It's put in that evening star formation, having pushed to highs. And now I look at us here, we're sat on 20,000. That's the way I look at it. We did have a little bit of a pop last week, okay, but that pop, produced a lower high. All right, it produced a lower high, and I wonder, is this just a ski jump, and is this us tracking our way back to that 20,000 number? Is that going to be the pivot number that we work around? Okay, over the next couple of weeks, and then if we look in the UK. Not much has changed, does it, really, from what I was saying? We're still in that kind of range between 8,100 and 8,400. We've popped up there. The 20 has acted as resistance there. See how it's basically PO20 there. But the way I look at it is a case of, the price and the moving averages here, they're all starting to coil up. Okay. And if those of you who joined us before will know, say, when price and the moving averages all coil up together, it's the calm before the storm. Now, maybe this is the calm before the storm, before, Starmer, the rumors are Starmer might replace Reeves with Gordon Brown. Make of that what you will, but maybe that is the calm before the storm. Okay. That invariably, as the price and the moving averages all coil up, and that we start to see sort of an indication of it getting ready to make a move. But one to watch, but nothing excited about in this particular moment. Let's have a quick look at appreciate gold weekly chart. That is just building into a triangle. It's coiling up, isn't it? Now, if you're looking at classical technical analysis, you'd say that is, it's a flag pattern, it's a continuation pattern, so we'll be expecting it to rise as high as the flagpole, and we'll see about that. But invariably, I think as people start to see yields on government debt rise, people start to think that inflation might come back. People start to then get interested in gold. But certainly, if we look at that on the daily chart, the last few days we've had a little bit of a pop there, haven't we? A little bit of a push up there, okay, and I'll be interested to see if it can continue with that. Last week we looked at silver. Let's go to the weekly chart. Silver, I said it was double bottoming, okay, popped above 30, but it's come back down. That's I look at that daily chart there. Once again, there's $30. There is the 200 period. There's the 20. There's the 50 price. The moving average and the big run up. That's all together. That is, as I said, it's normally the squeeze before it pops. All right, and that's what I see as there. Okay, so just intraday you might be okay on that, but if you're looking for a swing, I'd be just waiting to see a bit of clarity on that. Okay, that's just getting ready to do its business. There have been there have been some swings on Bitcoin here, weekly chart of it. We've pushed up to those highs just at the end of last year. We've kind of rolled off a bit, and last week, we're creating a lower high, and I would look at that on the daily chart. On the daily chart, I would look at that as, excuse my drawing, there's the possibility of like a head and shoulders pattern building there, okay? Left shoulder, head, right shoulder. That right shoulder was built with a key reversal back beneath the 50 there. So, there's kind of, that's what my view would be there, okay? And if we get sub 90,000, well, then 80,000 starts to be coming out. There was clearly some huge buying strength here, but I'd be interested to see if we come back down into that to find a way forward. All right, let's have I'm going to have a look at the dollar, a look at sterling. Okay, we might overrun by a couple of minutes. As I said, there's been an awful lot to cover today. All right, as I said, as the kind of markets wake up, everyone last week was still on holiday mode. Everybody was still, the weather was awful. Everyone just basically, wasn't that interested. But of course, as the week has gone on, okay, people are starting to wake up and want to get a piece of action. All right, so this is my dollar profile here. What have I got here? Aussie dollar, euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, and of course dollar index. So I always have this up to be able to look at the majors. Yeah, as I said, dollar index still in that strong move. We just literally tickled the soft underbelly of 110 this morning, but you can see having pumped and pulled back. That's a really nice 3-bar reversal, really nice pullback, pushing our way towards 110. Dollar strength. There is nothing here in this moment, at this particular moment, for me to sort of say, why would you fight that? Okay. Now, of course, a week from now, once we start to get A, post news, and B, inauguration, and remember, we've also got CPI and PPI data for the US this week. That might be different, but today, you're looking at that is dollar strength, right? And you don't want to be fighting that, and it's reflected here. Dollar against Swiss franc is continuing. Remember, last week we were looking about how the last couple of times we've been up towards the 200 period moving average, it's acted as real resistance. Last week went through it and it closed above it. That's that reflection of that kind of that dollar strength. Dollar against Japanese yen, has strengthened as well. We're back up above 157. People start to get nervous in this region, as you can see here. This sort of makes the Bank of Japan start to think about intervening, okay, or coming out making comments to basically sort of maneuver markets. We'll see if anything comes from that this week. I don't think there's any major official Japanese news this week, but that doesn't mean the Bank of Japan can't come out and start saying a few things. We spoke last week, okay, about how it had been a pretty terrible quarter for if you are long the Australian dollar, all right, against the US dollar, and same with Kiwi dollar, okay, and Aussie and Kiwi are still at the bottom of the pile. US dollar still top of the pile. That's the STAM. I want to be buying strength, selling weakness. Along with that, okay, because I appreciate lots of people trade it, euro against the dollar has continued in that same vein as well. All right, that is still a case of dollar strength, euro weakness. Once again, we popped and then we pulled back. This was a nice 3-bar reversal here. Nice opportunity to basically to short into the trend on a pullback, and that has just continued to play its way out nicely. So you can see that you've got all the idea there, okay, in terms of strength in the dollar, and there's no point in fighting that. So let's finish with sterling here. I think I've got sterling on the daily chart here. Yeah. So here we go. Sterling cable here, euro sterling, pound Aussie, pound Canadian dollar, pound New Zealand dollar, pound Swiss, pound yen. Okay, you can probably get the idea as it is. I was hoping to get a short on pound New Zealand dollar, okay, this morning, but that missed my didn't pull back enough on that. Well, woulda, coulda, shoulda. But we can see pound against Aussie, even pound against Canadian dollar. Look at that. Remember, looking at the STAM, Canadian dollar, Aussie dollar, Kiwi dollar, they have been, kind of at bottom of the pile, but you can see that even that over those last week and continued today, that has been continued sell-off, all right, of sterling against them. And if we look at a couple of the big boys, so cable, yeah, remember last week I talked about how this was 2nd of January, first day of the trading day of the year. Sterling got dumped that day, all right? Sterling got dumped that day, and it never really recovered. It pulled back, gave you an opportunity, and then you can see for that's just accelerating. People were saying at the start of the year, we won't get to 120. Those people might want to sort of reevaluate those calls because, as you can see, that's going one way at the moment. All right, that's just one-way traffic. Even pound against Japanese yen. All right, okay, that is one-way traffic for the last week. Look at this. All right, and it's a pretty similar story. Pound against Swiss franc. I've been talking about how. Let's go to the weekly. I've been talking about how it just pound against Swiss franc had just been annoying me, all right, for the last quarter. You can see just literally working its way, pivoting around at kind of 112 level. Nothing really terribly pretty in there for a swing trader, but once again, 113.50, can't get above it, drops. Look at that, bash. Every man in his dog. It's, it might sound pretty harsh and terrible, but it is kind of, it is like playground bullies, all right? They're always going to pick on the weakest kid, and the FX markets are the same. Sterling is weak, so every man and his dog is going to pile into that. If we look at euro sterling, remember, euro has been pretty weak. Euro is like number 6 on the stand. The sterling is 5th, but we have that double bottom, not a particularly pretty one, but you can see for yourself, all right? Even euro is strengthening against the sterling, okay? At this moment, I'd say we're up to that 200, and as I was saying last week, it needed to get above the 50 and hold above it, because you can see the resistance we've had there the last couple of months, and it is well and truly taking its way through that. So let's draw us to a close there. I appreciate that we overrun there. As I said, I'm trying to fit in as much as I can. I appreciate I do race through it. I try to cover as much as I can in the time we have together, and also lots going on. So I just wanted to share with you. I would definitely be keeping an eye on sterling this week, okay, and also watching the news to see if there are any repercussions for Miss Reeves and her future employment prospects. And as I said, lots of that American banks, okay, Wednesday, Thursday, and then, as I said, we've got CPI, PPI as well. Got a whole host of other data coming out this week. It's going to make it eventful. So, as I said, make sure you keep your powder dry, manage risk, wait for the good opportunities, and this week watch your trades like a hawk. I would be suggesting, because there will be all sorts of shenanigans going on. As always, I wish you the best of success in your own trading. Those in the VTP, there'll be the week 1 coaching call tonight and the week 2 stage 2 coaching call tomorrow. For the rest of you, have a fabulous trading week, and I will speak to you soon. Take care, everybody. Cheers.